Welcome back, investors, to Ticker Time News. I'm Adam, and the first week of 2023 closed out with that expansion move that we'd been waiting for. We predicted that it would take within 3 trading sessions for it to happen, and it sure did. On session number 2, it took off. Apple up 3.7%, Amazon up 3.5%, Alphabet 1.3%, Microsoft 1.1%, Tesla 2.4%, but there was a significant swing in Tesla to get it into the green today. We'll talk about that in just a moment. Now, that neutral chart pattern setup that we've been talking about for quite some time now, let me pull up the chart here. Okay, let's do this and get that chart up. Not that. We'll go over and look at rates in just a moment because they changed significantly too. All right, the chart pattern, the ascending triangle. We've been seeing it all over many charts with the flat top as resistance and the ascending trend line as support. It's been holding now for a couple of weeks, and that finally broke out today. And on the positive side, I mean, it was a nice breakout gain of at least 2% or more for the main indices today. Plus, our top 10 momentum stocks list played out with an average of 5.1%, beating the SPY's 1.9% for the week. So week 1 off to a great start as well on those. Now, the upside bias today was driven by the thinking that the Fed may be able to pause its rate hike sooner than previously thought. To that end, investors turned their attention to the average hourly earnings number in the December employment situation report, following a spat of strong labor reports like the JOLTS, ADP, and initial claims earlier this week, which caused the market to drop yesterday. Now, the employment report reflected wage inflation moderating to 4.6% year over year in December versus a downward revised 4.8% in November. So we got 4.8% in November down to 4.6% in December. So wage inflation kind of turning over there a little bit. That was a kicker in today's rally. It was better than feared. Now, this is exactly what set markets off to finally break out of the ascending triangle pattern that's been forming on many charts for the past 2 weeks. And the Treasury market also did the stock. The initial move by the S&P 500 hit resistance at that sticky 3850 level and quickly got rejected, knocking it back down to the 3810 level. Let me clean up the chart here and get those 2 lines off. And I want to go and look at the 15-minute time frame so you can see this. And I'm also going to turn on that 5-day moving average calculated for the 15-minute time frame. And let's open this up and take a look at what happened today. Boopity-doo, doopity-doo, and bring it up, open it up a little bit. There we go. All right. So here was today, right? This morning, we gapped up at the open, but real quick, we hit this red line up here, which has been resistance, and it is the top part of the ascending triangle. Okay. That's been the resistance area. We hit it this morning, first thing, as soon as the market opened, and then we sold off from there, coming back down where? To the support, the ascending part of the ascending triangle, that blue line. So we hit both the top and the bottom today before finally going up, breaking above it, and then we hang out at this level right here for quite some time. What is this? Remember this black line that's right here on the screen? I know my arrows aren't that great. I'm trying to get better at them. But this is the anchored VWAP that's anchored to the low of 2022 that occurred on October 13th. Well, that has been like an absolute resistance area for the past couple of weeks now. And we got to that point thinking, uh-oh, are we going to break this? Are we going to break through? Or is this going to hold as resistance too, keeping us back? Finally, though, we broke through, shot up to 3,900, 390 on the SPY, and that was it. That was the day. That was today, leaving the S&P 500 up 2.33%. The Qs were up 2.8%. The Dow was up 2.2. The IWM was up 2.25. The mid caps were even up 2.6% today. Everything did good, except for the dollar, the 10-year yield, and the 2-year yield. Those three cooled down, going down, helping to accelerate the burn and that rally that we got with the magnificent breakthrough of the ascending triangle and the breakthrough of the overhead resistance with the anchored VWAP. These were great. Buyers in both the treasury market and stock market latched onto a new rally catalyst in the form of the December ISM non-manufacturing index, which was released at 10 a.m. Eastern. And that would be right here. Okay. This actually, let me clean up the chart just a little bit. Let me do this so we're all clear on where we're supposed to be looking on this amazing breakout today. All right, this right here, this is the 10 o'clock candle right here. That data dropped right there at 10 a.m. Eastern time, which gave us the fuel to ignite the afterburners and launch this baby up to and through resistance. It was wonderful. Now, this drop, this econ drop today left the ISM non-manufacturing index, which this is why, in contraction territory. The ISM non-manufacturing index is contracting, okay? And we broke below the 50 reading. And remember, that 50 reading, if it's 50 and above, we're expanding, we're growing. But 50 and below, we're contracting, and there's no growth. So the ISM non-manufacturing index came in under 50. Now, you would think, oh no, it came in under 50. And that was the first time that it had come in under 50 since May of 2020. Yeah, May of 2020. Now, the downturn reflected a clear slowdown in economic activity that is a byproduct of rising interest rates and weakening demand. So a data drop, an econ drop that says the economy is slowing down, and that led markets to take off and accelerate and just boom, shoot right through the two resistance areas that have been holding this market back for a couple of weeks. Yeah, that's what happened. The understanding is clear. The slowdown in economic activity fueled a sharp move lower in treasury yields, especially the 2-year yield, and a sharp move higher in stocks, helped by short covering activity and a sense that the Fed won't be able to take the target range for the Fed funds rate much higher before it decides to hit the pause button. This caused the probability of the 50 basis point rate hike on the CME Fed Watch tool. And let's just go over there right quick. And let me show you. We looked at this yesterday, and we saw yesterday that this was not quite the case. Things changed. As a matter of fact, this swung 12 points higher today. to a probability of 74.2% of a 25 basis point rate hike on February the 1st. Now that 75 basis point probability is down to a 25.8. Remember yesterday, it shot up the 75 basis point. But now today, with the weakening economic data point that we got today, that the 25 basis point rate hike, it went up as a probability. Again, 12 points higher just today. Now, we have been talking about this for months now, that the Fed is going to go 25 basis points February 1st, and then 25 basis points again on March the 22nd, giving us our 5% on the Fed funds rate. Now, I think that is definitely where we are headed. Now, let's get back to the chart over here, and let's clean it up a little bit so we can see things here. We want to look at this. Now, the broad-based buying, which I'm going to get into in a minute, that helped the 11 S&P 500 sectors close in the green today. Let's switch this over now from ticker SPX for the S&P 500 and look at the SPY, okay? Here we go. Same thing, almost identical on the SPY, except the SPY did get a little bit higher this morning, breaking above that resistance before falling back down right to perfectly on that support line and then launching from there. That leaves us with the 5-day moving average now starting to incline, okay? It's not a strong incline, right? It's a bit on the weaker side when looking at that, but that should give you at least a biased lens to look through with what today happened on these smaller time frames. So this worked out wonderfully well. All right, let's go to the Qs because it worked out there even better for the Qs. Okay, so here we go. We've got the support line right here, right? And yesterday, the Qs broke down. The Qs broke down below that support. It closed below it, and it kicked off today, and it kind of slowed down when it reached that 5-period moving average, plus the resistance line that's been the stopping point for the ascending triangle for the Qs, plus the anchored VWAP for the low of 2022. So we had 3 different resistance points right there all together for the Qs today, but it didn't hold them back. It slowed it down, but it didn't stop the Qs from rising until we got to the end of the day, and we got up to about 270 a share, and then we cooled off a little. Those that made great gains today kind of sold out, took their gains. I was one of them. I sold out on this candle right here with about 45 minutes left in the game to be played. I took my gains and I cleared the board. So now I am whole. Nice gain for today. And now I'm sitting empty-handed. Nothing's in play for me. All right, let me go to the daily view real quick for you here on the Qs so you can see this impressive move made by the Qs. I mean, look at this. Yesterday, it breaks down through that support right there, closes well below it. And then today, I mean, it got all the way down here at one point, at its lowest point of the day, before shooting back off and breaking that resistance right there. All 3 of those resistance points right there. It was pretty phenomenal to watch the QQQ break all that resistance at once. So really nicely done. Now, this does give us the possibility that next week, is this a resistance point here, right? Is this going to be one forming because it matches up right here? And then if we cut it across, it also matches up right there and right there. Is this going to become the new resistance? It's a good question, right? Is this going to become new resistance? Because next week, we have got Jerome Powell speaking. And you know, when he speaks, he carries a lot of weight, and he also creates a lot of turbulence in the market, a lot of volatility in the market. And we get CPI data and a whole slew more of econ drops and Fed speak. So we'll have to watch out for that next week and see how this is going to play. All right, let me show you the Dow real quick on the daily view. The Dow also, obviously, it didn't move as much, but still, this is a strong move for the Dow. But also, again, it lines up here with prior areas of either resistance, chop, support. I mean, this line can go quite the ways. It's a very sticky point at about 335 on the DIA ticker. This could now be the new resistance, all right, that we'll have to either break through or break down from. We'll talk about that obviously more as we start getting closer to Monday. All right, let's go to the IWM, and I also want to show you real quick just the MDY, which is your mid caps, to show you that everything broke through their resistance today, bouncing off their support. I mean, look at the IWM. Perfectly, oops, don't want to move that. I want my highlighter back. Perfectly moved off its support right here and then broke through that resistance. Now, for the IWM, it's not quite to that same point of resistance that the others are at. It could actually go a little bit higher before reaching that next stage, okay? So we do have to be cautious about this breakout. Is this a dead cat bounce just because the market was looking for this opportunity, and then the opportunity finally occurred, and now, you know, we're at a new level of resistance, and maybe we come back down because data that is released next week or Jerome Powell talking next week? It's something that we have to consider. All right, the MDY ticker, you can see too, it broke its 200-day moving average. That was also at its resistance level. I mean, this thing, it had some resistance to break through, but it did it. It did it. And if I back this up, you'll see, let me adjust this chart, it actually broke through its long-term resistance. That red line that captured all of the peaks going back to November of 2021, all of those peaks were rejected. It did break through here, but ultimately fell back through. It broke through that line today. So, are we finally turning the page on some of this? Is the announcement of a weaker economy going to lead to the market rallying, which is something Jerome Powell does not want to occur? Well, I mean, today was just a big, strong move. But we also have to keep in mind that it could be a dead cat bounce and it's a one-off, right? And then we just hit a wall again and we just continue to move sideways. But the point that I just want to bring home is that for a while now, we've been talking about the expansion move down, the contraction move being made, and what comes next. Expansion. We got that expansion move today, okay? So where are we going from here? That's a good question. I'm not quite sure. We have to go off of one other thing that I talk about all the time, that I said in yesterday's video probably 10 times, is it all depends on the data. What does the data say? Today's gigantic move was because of data being dropped on us and market participants reacting to that data. And we're getting a whole ton of data next week. A whole ton of data next week. And this market is moving on those headlines. So I know it's exciting to see the market rise like this, but remember, it can be a one-off. Don't forget that. Don't get caught up in it. Okay, now onto the dollar here. We can see the dollar came right back down. However, like you can see here, it did break that resistance line yesterday, but with the dollar pulling back hugely today, 1.2%, it is still within its trading range. And if you want to see equities go higher, you need to see the dollar break this support. And it hasn't yet. That's one reason why I'm cautioning about a potential one-off, a new resistance being hit. Okay. All right. Let me go to the 10-year here. I want to show you the 10-year and then look at the 2-year. All right. Here's the 10-year. It broke down from its trading channel here. Okay. It broke down. However, it's just at an area where it's chopped around before. And remember what I said yesterday, and I've said for over a year during these live streams. What gets the 10-year to react? Growth concerns and inflation. Okay. If inflation's going up, the 10-year is going up. If the economy is growing, this can grow. When you have econ drops like we got today that shows the economy is weakening and slowing, contracting, you're going to get the 10-year to drop. That helped the Qs. All right, wait till you see the 2-year. It's even more shocking. Look at this. This is a way more shocking move to me. Okay, what is or what pressures the 2-year? What gets the 2-year at a rate of change like this, moving 4.6% today? The 2-year makes big moves like this due to the Fed funds rate. So if market participants think the Fed is not going to continue raising rates, what is the 2-year going to do? It's going to drop like you see here today. This was an incredible move. I mean, going back a month and a half, I think this is the biggest move yet. We go back here to December the 13th. That was a 3.5% move. And November the 30th, that was a 3.7% move. Today was 4.6. So an even bigger rate of change being made on the 2-year. I mean, it's just a huge move, but it's all due to the probability of a 25 basis point rate hike instead of the 50 basis point rate hike that market participants were thinking was going to happen yesterday, causing the 2-year to accelerate up yesterday. Okay. Now, the second thing that you can take away from the Treasury market moving like this with the 10 and 2 is fear. Fear. What happens to the yield when people are moving into them? The yield drops. The yield drops. It's got the kind of opposite effect here of how equities move. All right? An opposite effect. All right. Now, moving on. Let's see here. Boom. Never got my entrance in the first hour, so I just sold puts. Hey, that's okay. That's okay. Let me go back here to the SPX and just look at this thing. I'm going to go to the 15. It was a scary move. I have to admit. I wasn't confident this morning with the way that it was moving. Let me bring this up here. All right, so 15-minute time frame. I wasn't confident about how this was moving this morning because we've got a small gap up, right? Bringing us, because remember, we closed yesterday just slightly below this support line, okay? So we bounced all the way up to the resistance line this morning. And then we just come shooting down like a firework, okay? Gap up this morning, move higher, and then it all evaporates. And then at 9:45 to 10 o'clock, when the ISM non-manufacturing index data came out, that's when markets bounced off of this support level. If it wasn't for the ISM non-manufacturing index, I don't think we would have had the same results today as we had today. If it was just the employment report, and that's all we had today, I don't think the markets would have moved nearly as high. I don't think it would have broke support. I think the market might have headed below and broke down from its support. It was the ISM non-manufacturing index contracting for the first time in over a year and a half. That is what sent the markets higher. That was the recognition. That's what the market needed in order to add any fuel to this, because we get the gap up from the close of the 9:45 candle to the open of the 10 o'clock a.m. candle, Eastern times, right when that report came out. That report is what lit the ignition for today's rally. So again, it is headlines and data drops that are causing the wild swings in the market, the volatility in the market. As a matter of fact, midday today, when it got here and it was doodling around on that anchored VWAP, I thought that was it. I thought that would end the day. I thought, well, that's where we're going to stop. We're not going to go higher. I was surprised it broke through that. Okay. All right. I'm just cleaning this up real quick. And going with puts after a big move like this, right? And we're just going right back into an area. If I tighten this up, I mean, you can see all the times. All right, let this recalculate and update. All right, come on. Update for me. Okay, come on. Okay. If we look at where we are, where we ended, it's these areas right here. They've been support, resistance lines going back to May of 2022. May. So for months, this has been, that 3,900 level has been a very sticky area where it either helps you out by adding support or it doesn't by adding resistance. And we couldn't break and close above that 3,900 area today, even with the amount of momentum the market had today. Even volume today, it didn't even, I mean, it barely, it looks like, cracked the average. So volume today, 2.4 billion on ticker SPX for the S&P 500. The average is 2.3 billion. So about 100 million more trades taking place today. That's not a whole lot when you're looking at the average. So 3,900, we closed at 38.95. 3,900, that could be the new resistance now, and we're going to go down from here, especially with next week's data. So there's a lot that can happen right now. Market participants want so badly for this market to go up after, 2022 and what took place there. I'm just not sure if we're going to get that type of a rally. I mean, because of the 2 weeks hanging out in this ascending triangle, when you look at the volume profile over here, right in the middle, right about, what is this, 38.35, so 380 to 385 on the SPY. I mean, that's the average price point that is being traded. And that makes sense because we go right above it, right below it, back and forth, ping pong, all day long. January effect. Oh, okay. January effect. Small mid caps outperforming large caps. Yeah, that's happened for the past several years, especially with retail investors being in the market more so after 2020 and after the pandemic occurred. I'm curious how this year will play out because we know there are less investors in the market. There are less retail investors in the market. Yeah, that drop was random. Let's see here. Now we know the rate hikes are in 25 or 50. Do you think market got some direction? I just think the market, it wasn't the employment situation that helped the market. Because if it was just that, the market may have just moved sideways today, staying right on that support line or breaking below it, like the Qs did yesterday. With the ISM non-manufacturing index coming in showing that the economy is, or at least that portion with that index, is no longer growing. It's now shrinking. It's in contraction phase. Remember let me pull it up here, the rotations, the sector rotation, right? When we enter the contraction phase, I mean, it's the line right down the middle right here. If you're above this line, then you're in expansion, okay? You're below it, you're in contraction. Well, what comes next? Well, a recession is what comes next when the economy is contracting. How deep and bad and dirty is this economy recession going to be? I don't know. But we're getting the signs that that's where we're headed in 2023. Okay, so today's data just kind of, for me, helps to confirm my belief that we are leaving stage 6, the last stage of this cycle, over here, and we are entering stage 1 over here. And just remember what performs best in this time: bonds. Stocks still go down right here. Stocks and commodities still go down. Just keep that in mind too. Okay. Does the market have direction? Was direction gained today from the market? I don't think so. I think the market already expected a 25 basis point rate hike. Now, yesterday there were some extra fears added, which helped the retreat in the market yesterday because of Fed speak and talking about needing to go up 50 basis points. I think we will go up another 50 basis points before the pause occurs, but that 50 basis points is going to be split up between two meetings. February 1st, we'll get 25. March 22nd, we'll get our second 25. And then I think the FOMC, the Fed's going to hold. And how long the Fed holds from that point all depends on the economy, inflation. So the jobs data, it's not helping to make the case for the Fed to pause because it's remaining strong, which means the Fed can still over tighten to fight inflation. That's my thought. That's my thought on that one. Unless CPI scares, you are true. CPI could totally knock this thing completely apart. As a matter of fact, here's what comes out next week. Where we got our... Yep, okay. So on Monday, we get Fed Chair Powell, and he's talking. He's giving a speech starting at 9 o'clock in the morning. So the market is around open going to be dealing with every single word he says. And that's going to affect the markets and their mood on Monday. And then we've got Tuesday, not a lot right there. And then on Wednesday, the 12th, we've got inflation, CPI report, core inflation, CPI, what else? Inflation rate, initial jobless claims. So on the 12th, this is really going to knock the markets around. And if we look at inflation, prior reading 7.1. I mean, look at, they think it's going to go down to 6.5. Really? Core inflation, 6% last time, 5.7% this time. That's a big drop in inflation when you look at altogether CPI. I mean, and then core inflation, 5.7 from 6. Still, those are big drops. And it's the food and energy that's always forefront in our minds. Paying our utility bills and going grocery shopping. We know that's not down. That's been holding steady or going up. I mean, Jiminy Crickets, our last electric bill, I mean, it shot up. Sure, it did get a little colder, but we also had a whole week of really warm days where the system wasn't even on at all. So energy prices are going up. Food prices, I don't even think they've dropped. And that's not going to get better. So, well, I mean, we'll see how this is going to play out. And then on the 13th, we get more Fed speak, and we get the Michigan Consumer Survey. That's next week. So Fed speak, one of them being Jerome Powell, CPI, excuse me there, CPI, it's just more Fed speak. It's just sentiment. And look at sentiment, what they're doing right here. 59.7 was the prior reading. They think it's going to go up. They think people are feeling better about our economic situation, inflation. going up to a 60 points. I don't know what they think they're doing, quite frankly. And then on the earnings calendar, we've got ticker UNH, which is United Health. This is a big component in the Dow. JP Morgan Chase, yep. All the banks, big banks, they start reporting. And then we've got Bank of America, Wells Fargo, BlackRock, Citigroup, Bank of New York, Mellon Corporation, Delta Air, First Bank, First Republic Bank, Albertisons, which is a grocery chain, TD, I can't read that, SY, Cinex, Jefferies Financial Group. I mean, these are the biggest market cap names that I started with on this list. So United Health, $457 billion market cap. JP Morgan, $404 billion market cap. I mean, these are going to move the market next week and the financial sector big time when they report. And we've got all these top names. They're reporting on the 13th. United Health, 13th. JP Morgan Chase on the 13th. Bank of America on the 13th. Wells Fargo on the 13th. BlackRock on the 13th. Citigroup on the 13th. I mean, all the way down to here, $22.7 billion market cap, all reporting on the 13th. And if we just run back here real quick and look at what else is happening on the 13th, we get consumer sentiment, import, export month over month, and Fed speak. So there's a lot happening next week to be aware about. And that 3,900 level, that looks like overhead resistance. However, though, since this is where we closed this week on such a breakout move like this, the weekly expected moves, they're going to go up, something like this for next week. Bringing the probably the upper weekly expected move, somewhere over 3,900. Do we really think we can break that 3,900 level with potentially CPI staying sticky, Fed Jerome Powell coming out saying, oh, we got to remain vigilant, we got to fight, do our due diligence, and keep inflation down and keep fighting until it's down? I just don't think that, well, inflation was already big last year this time. Yeah, it was. It was. What did we get to? Nearly 9% inflation? What was it? Was it March and September? Weren't they like around the same readings or something? There was, I don't remember the months off the top of my head. Earnings starting soon. Yep, they start next week on the 13th. Is the first big name. Wasn't Christmas sales down by a lot? Yes, they were. Christmas sales were down by a lot. Retail sales were down over December. At least that's what the preliminary reports have been saying. That yes, less spending occurred over the month of December. Absolutely. Today, the market just wanted to stretch its legs for a chance. Hey, that's a good thought. It really is. I know a lot of market participants just wanted the market to rally today so bad that they took that econ data of a slowing economy and they launched with it. Yeah, that's good enough. Let's go. Pack your bags. We're going for a ride today. I mean, it was bound to happen. We knew it was going to happen. I was just unsure on which direction it was going to go, because everything that I was seeing was leaning more neutral to where we could easily have broken down. I mean, just think, if that ISM non-manufacturing index was over 50, I don't think the market would have launched. Or if that report didn't even come out today, if it came out on Monday, I don't think the market would have launched today. That data point was used as an excuse to say, let's go. The economy is slowing down. We're not going to get too many chances in the beginning of the year to really launch. So let's just do it today. I think that's really the market thinking. I don't think it will last. Bearish still. I am too. I'm bearish on the first 2 quarters of 2023. I do believe this market's going to head lower in the first half of 23. And I do also have a belief that it's not that far-fetched to believe that we could go retest that low of 22 sitting right down here. And what was that? 34.92? 34.91. You can round it up to 34.92. That was the low of 2022. And if we just take where we closed today and just go match that, that's only a 10.3% drop from where we are now. And just for fun, I'm going to measure it from where we closed yesterday down to that line, because that'll take a couple percentage points off. 8% drop. So to me, it's not out of the realm of possibility that we sink that low, especially if earnings recession occurs. And I still believe it will. All right. Well, let me go and look at a couple individuals here. I want to look at Tesla right quick because it had an amazing turnaround today. TSLA. Oh, I thought my cursor was over here. TSLA. Tesla was down 7.7% at its low today. And this is like a perfect example of playing the weekly expected moves, okay? Tesla today made a 10.5% move from trough to bottom. I'm sorry, from trough to top. It was down here, okay? Holding right above that $100 a share. It got to 101.81 a share. $101 a share is where it got today. And then it made a crazy 10.5% reversal to close with a 2.5% gain. That is just crazy. And it tagged its 50-day moving average, right? Yes, look at this. Tesla was connected with the 5-day moving average here. It spent 2 days disconnected, and then today shot up to reconnect with it. I was so close to buying calls on Tesla, but never hit 100. It will. It'll hit 100. The news out today that caused the initial drop was that Tesla further added to its rebates in China to try to spur demand or spur sales with the incentives. That's what initially dropped Tesla another 7+% this morning. But another thing I want to point out too, not just the 5-day moving average and how important it is for not buying in the hole and shorting it even more when it was so disconnected there, and it was on its 3rd day of being disconnected, shooting back up to reconnect with it. I mean, it just happens all the time. I mean, look at this significant one right here. Disconnected 2, disconnected 3, and then reconnects with it. Giant gap it had to make there to reconnect. But also the weekly expected move, it was right here, okay? Right there at 109. So Tesla gets down to nearly $100 after Tuesday, opening and then shooting down and closing just below the weekly expected move. And then the next 2 days, it basically just moves sideways, hugging the weekly expected move. And then as soon as it gets, outside of the weekly expected move like this, and also on Tuesday when it got outside of the lower end of the weekly expected move, what does it do? It moved right back up to being inside, right back up to being inside. Those are always plays that I look for. I look for those plays. When a stock has moved outside of its weekly expected move, especially if it occurs on that very first day of the week, it's bound to come back up. Let's see. Yeah, $100 a contract went up 300%. Wow. $100 contract went up 300%. Wow. Yeah, that would have been a nice one. That would have been a real nice one. Okay. I did want to do this. I'm going to keep track of this as a weekly thing throughout 2023, just to have a fair and accurate accounting. Our top 10 picks every week, right? Our top 10 momentum stocks list every week. This week, the SPY was up 1.9%, and our top 10 averaged a 5.1% return. So week 1, we beat the SPY. Our top number 1 in NFLX. Got to get right on the screen here. We'll look at the top 3, and then I'll just run down the top 10 list and tell you what they were. But our number 1 pick, Netflix, up 7%. It reached its weekly expected move, hung around there for a day, and then today it launches. But it got as low as here earlier in the day. That is a huge wick underneath that body for that candlestick. Huge underneath wick, which can end up being a top. Okay. This could end up being as far as it can go. All right. Number 2 pick was ExxonMobil. XOM is the ticker. It was up 3.8%. So 7% and 3.8% for the week. On Tuesday, it dropped real big, 3.4%, because oil came down too. But then the next 3 sessions went up. This one's got a long, tall wick on a top of a shorter body. That could also be a sign that watch out. But this is going to depend on oil, and if oil can hold, And then our third pick was Visa. Visa was up 5% on the week. So 7%, 3.8%, and 5%. Those were the gains for the top three. Then we had Boeing. It was up 8.9%. JP Morgan up 2.1%. Chevron up 1.5%. Home Depot, that was our lowest one, but it was up 0.5%. Why am I forgetting? AVGO, Broadcom, up 6.3%. Berkshire Hathaway up 2.1%. And then in number 10, ticker was PDD. This was our number 10. And I can't pronounce this company's name to save my life. But it was up 13.6%. And that was the biggest gainer. So we averaged 5.1% this week with our top 10 picks. So every Friday, I'll do an accounting of this. So it's live and it's out there. It's open. It's transparent. So everybody can see. And then maybe I'll create a web page on our website where we can track the weekly results and how it did. And we'll compare it to the SPY every week. So not bad for starting off 2023. It was really good. Hopefully you guys did good this week. Next week, obviously, the market's going to move with the data and however the data presents itself. So just be cautious of those data drops and the time at which they drop. That will be the most volatile times. Let me just see right quick. What did the VIX end up doing to this week? So it closed at 21.14. So anything over 20, it is high. Anything over 20, it was high. What did it get a high to? 22.9. Yeah, let's see the overall. See, it's really been moving sideways since that bounce. But even with today's candle, I mean, we can do this. Let me just open it up a little bit bigger. For the VIX here, I mean, look at this. If we go off this low and we run this up here, doesn't quite tag with today, okay? And then up top, we're going to have to bring it down like so. And this, to me, this looks like a symmetrical triangle. And what is a symmetrical triangle? It is a neutral chart pattern. On the chart right here, we've got the symmetrical triangle, bottom right corner, where, you know, you got your angles. They're equally on support and resistance, and it can break either way. This is a neutral chart pattern. So that's interesting. That's interesting. Okay, anything else that you guys would like to talk about to wrap up this week before we go into the second week of 23? I'll give you a moment. I've gone through everything I wanted to. Oh, let me look at one more. MULN. This is one that had a crazy short squeeze yesterday, and look at that. Down nearly 10% today, 9.6%. It shot up 25% yesterday, down nearly 10% today. I knew this thing was going to pull back. It just went on an incredible short squeeze. And then it's high today. Good gosh. I mean, it got up there. I wonder what the actual swing was from the absolute top here. So it opened down here, a 21.1% move from open until its final, I'm sorry, open is up here. My apologies. 14.4% move from open till its high of the day. And then from its high to its low, it went and moved 22%. From the tippy top of the wick to the very bottom of the wick, 22% swing. Incredible. In phase, yeah. Let's throw in phase up. In phase, I love in phase, but I do think it is expensive. ENPH is the ticker. Brutal. But, you know, to me, it was expensive. This pullback is no surprise. No surprise at all. So let's see. Did it actually break structure? Yeah, it did. We had a change of character here today, because the low that was set over here, that it went right through that. So we had a change of character with setting that low, breaking under that low. But it doesn't look like it closed. Looks like it closed right on that low. And then if you look, this is what's, you know, troubling for in phase right now, is this sell-off that has occurred. It can go a lot further, okay? If you look at where in phase is sitting right now, it's sitting right here where the candle opened the day after earnings. So in phase had a 17.9% gain the day after earnings occurred, and that's where it's sitting at right now. So this gap could very easily, because there's a huge gap here, could very easily, and also looking at the volume shelf profile, we've got an air gap where right here where that gap up occurred. So in phase can very easily come down to 215 in a snap in a day. So I'd watch that 230 area, and if in phase breaks it, it's going to drop to 215. I think that would be a good short. Actually, I'm going to write that down as a short idea. Now, you do have to be careful. It has been selling off, and pretty substantially. And that 215 level, that's kind of like, you know, the first place that I would go to for some kind of support. It can fall further. I mean, looking at where the charts are lining up here, the volume shelf profile, 180 is also an interesting place. But it would have to have a bit of an earnings problem. As a matter of fact, let me look over here at earnings. So the past 4 they beat. Next earnings is on February the 8th. And if we look at the past few quarters here, revenue has been growing. Profit margin has been growing. I mean, it went profit margin 14.5% up to 18% from Q2 22 to Q3 22. And then, Q4 will come out on February the 8th, down 13% year to date. Over the past year, it's still up nearly 50%. Past 6 months, it's still up 14%. But, I mean, 1 month, it's down 25%. 1 week, down 10%. So you do have to be careful that it's dropped 25% in 1 month. So that's why if it can't hold these lows that were put in right here, then it's going to break hard and fill that gap and the air gap too that is right there. Okay. That's in phase. I like the company. They're too expensive, and I think there's a short in store for in phase. I don't think earnings are going to be a savior for in phase. One thing, with this 25% drop in the past month, watch it. It has been disconnected from its 5-day EMA for 1, 2, is that 2? Yeah, it looks like today was the 3rd day being disconnected from it. So watch for a potential bounce here from just being oversold. The RSI is at a 20. So it is extremely oversold right now. So I would first look for a bounce. It is yesterday it cracked through its 200-day moving average. And historically, nothing good happens under the 200-day moving average. That's an old adage. So yeah, first watch for a bounce, for it to catch its breath, and then if it breaks this, it's going to go lower to fill that gap. Okay. Alibaba. BABA. Didn't Chinese stocks fare pretty well this week? Oh yeah, they did. Yep, look at that. It broke that resistance and gapped right up through it. That's strong momentum there. What did it end up doing this week? Let's see. Where's Tuesday? All right, so Tuesday, it opened right at its 200-day, or it closed, my apologies. It closed right on its 200-day moving average on Tuesday and then accelerated to close up nearly 17%. But let's look. Last Friday, it was down here on that support. And then going to this Friday. So Friday to Friday, 21.4%. This thing is stretched big time. I don't even need to go in on a lower time frame and look at that. I mean, we can clearly see it's 1, 2, 3. Today was day 3 of being disconnected from that 5-day moving average. Watch for a pullback here. Watch out for a retrace. If we happen to do a fib going from the low, which was October the 24th, to today's high. Look at that. For this to pull back using the fibs, it comes right back down to this support area. I'm sorry, right back down to this old resistance area right here. Can this hold as support now? Would be the question. I mean, geez, it lines up perfectly. And then, your next move down would bring you back down just above where the old support was down here. So a pullback to here would not be out of the question. Old resistance could become new support. And that pullback to 96.2 from 107.4 where it's at right now. So that's even a potential short idea. Let's see here. I'm going to write that one down too. Possible short because it's overextended. What is the... Yeah, RSI is 75, so it is overbought. Now, just one thing to point out, looking at in-phase being oversold and BABA being overbought, they can stay at those extreme levels for a little while before they do their corrections. But those corrections, they should come. Yeah, I mean, this support area here for Alibaba, I mean, you can see that's just been a chop zone. Sorry for that. That's just been a chop zone for Alibaba going back to April of last year, where it's got caught up a whole bunch of times before. But it is one that's down massively from its high. Way down. What was that high right there? 313 October of 2020. Now it's down to 107. Okay. Let's see here. Oh yeah, lots of zombies. There are so many zombie ETFs, companies, individuals that just needs to get flushed out of the system. And that's one point of the cycle. I mean, this cycle right here, it does a great job of flushing out zombie companies, flushing out the unprofitable, the ones that aren't innovating, the ones that aren't keeping up. I mean, the cycle is a good way to flush the system, clean it out, and reignite with all clean, healthy businesses, ETFs, hedge funds, people. I mean, it's what it's for. I mean, the cycle, it's not there, just to hurt companies or individuals. It's there to flush them out. So you're in good places. You're in good hands. And, that's one of the reasons I kept doing this live stream throughout 2022 is I felt that, the information would be good enough. Let's see here. Cat is all-time high. That's interesting to me. Caterpillar is interesting. Bet it is up there like that. Let's see here. Man, it really beat earnings last time. Its profit margin, it has been improving over the past 2 quarters. Revenue ticked up its last quarter. It went from 14.2 billion to 14.9 billion, call it 15. Net income went from 1.6 billion to 2 billion. Net profit 11.7% up to 13.6%. So there has been some improvement from Q2 to Q3. Curious to how Q4 would even do. Let's see, cat and deer on short list once we roll over, happening as early as next week and within 3 weeks. Yeah, I like Deere as a company. I think they're innovating, keeping up, but this abundance that the agriculture business, and I know it's not in every segment of agriculture, but the equipment makers have been in an abundance. Look at that. That improvement quarter over quarter. I mean, the past 3 quarters have been improving. And there was a huge spike Q4 21 with its profit margin. And I have to look into why that occurred, but I agree with you. Something that's moved this strong going into a period of time where companies aren't going to be able to buy new equipment. They're just not. We go into a recession? No, no, no. So, yeah. I'm going to write these 2 down too. And this thing has just gone crazy. Look at that parabolic move. And that was on its last earnings report. It reports earnings on January 18th. So that's coming up. Not next week, but the week after. And let's just look at Deere real quick, just to compare the two. I know their equipment can be different. Man, look at that move in Deere. Wow, it's really, really shot up there. But it reached its plateau where cat is still climbing. I can't remember when I put these lines on the screen, but they're holding. That's where Deere is headed. Interesting. Well, I've got them also down here on the short list. Maybe that's something that I should publish. Maybe I should publish a long short book. I think that would be interesting. I don't know to do it on a weekly basis or what, but a long short book I think would be interesting. because, quite frankly, we already have half of that put together. The top 10 momentum stocks that we do each week, we just need our top 10 shorts for the week too, and then we'd have our long short book. And if the long side of the book is weekly, the short side would need to be weekly too. So we could do our long short book for the week. Plus, I'm still talking it over and thinking about the Sunday evening video, like we used to do, the Catalyst Watch video for the upcoming week. Okay, cool. All right. Cat and deer doesn't show any recession signs. Yeah, it's interesting. Dow theory talks about industrials and transportations. And for an economic slowdown, industrials need its time to cool off. Transports too. They need to pull back. They need to cool off in order for the recession to occur. And then those are like some of your first signs of when you're moving out of a recession. So I see your point there. You absolutely nail it there. All right. Well, it's Friday evening. I don't want to keep you guys much longer. So I think I'll wrap this up for tonight. And just do me a favor, please. Click that like button, share this video. And if you're new, consider clicking that subscribe button. We go over a lot during these live streams. Your questions, top of the list. Also, for our investor community, weekly expected moves will go out this Sunday evening, and we'll do so for the year. So watch for your Discord notification or your Patreon email coming out Sunday evening with the weekly expected moves for the upcoming week on about 40 or so products. We got that coming out. There's a lot. There's a lot we're looking to add this year, including the book maps for level 2 data to show you where maybe little hideouts are for Tesla or for the SPY or the Qs where orders are placed. Now it's not static. Those orders don't just stay there. They're constantly moving. It's a fluid chart, but it at least gives you a snapshot of where the orders are at the end of the day. And I think that would be an important aspect to add when we're talking about an indice, an ETF, or a specific stock, also looking at the book map to see where the orders are hanging out, because that really helps you to understand support and resistance. Okay. You have a good weekend too. Thank you. Good start to the year. Absolutely. Have a good weekend. You have a good weekend also. I greatly appreciate you guys. Much appreciated as always, brother. Follow the Twitch too. Yeah, I never mentioned that. You guys asked me to set up the Twitch stream. So I do YouTube, Twitch, and Twitter. This stream goes out to all 3 platforms at the same time. So you can always catch it on either one of those platforms. The YouTube and Twitch stream, the comments can come in back and forth. Twitter, the comments don't come in on the software that I'm using, but at least the live video goes out there. You are welcome. You have a good one too. I'll see you guys back here on Monday after the market has closed. I'm 99% sure that it is. When I send out the feed, it has me check off a box for YouTube and for Twitch for where to categorize the video, and that's what I select. I guess I need to go double check and make sure that that's what it's doing. But thank you for that reminder. I will double check that to make sure that Twitch is doing that. Awesome. Thank you. I appreciate it. Just check, thumbs up. Great. Thank you. I appreciate that. I really do. I really do. Okay, cool. Then is it set gifted gifted subs should next week's trading be successful? Okay, good. Good. Okay. Yeah, here's to next week being a successful week for you in your trading or investing, whichever angle you're taking, that's fine. And again, I'll be back here Monday to talk about what happened, why it happened, and what to expect going forward, and to answer your questions, because that's the most, I don't know, that to me, that's the best part about this live stream. I could just sit here and, just wait for the comments to come through and I'd be fine, but, I can't just sit here quietly and wait. So thank you guys. I greatly appreciate it. I'll be back on Monday. Until then, have a wonderful weekend. And yeah, that's it. Have a good night. I'll see you later. Have a good one.